So there was a question in the forum here from Michael, and he asked, what are the circumstances under which I should cut a losing trade early ahead of the stop loss? And here's a very good example. It does not really matter here which time frame or market we are on. The principles are always the same. So let's assume we were here in this uptrend, and then we were looking for a short reversal, classic short reversal here once the SMA broke. The stop loss would go here according to the rules above the recent candle here just before we broke the SMA. The target would go probably either here in this flip zone, but this was probably here at this demand area. We missed it, but that's not the issue here. So when do we cut such a losing trade? If you have been through this video course already from me, then you know there are two ways to manage a trade. The first is the set and forget, where after you enter such a trade, you don't look at it again. You just let price do its thing. Either price reaches the take profit or the stop loss order. Whatever happens first, that is the outcome of the trade. And that is a good option, especially in the beginning when you're just starting out with a system, because what happens with the set and forget is that you're not always trying to fiddle around with the trade. You can make observations very easily and very good. What I have seen very often is that when traders fiddle around with the trades, they always try to move the stop loss, add to a trade, cut a trade, and those type of things, is that they lose the perspective for the overall price action, for the overall market scenario, and they are too worried about their P&L. So this takes away a lot of time from the learning curve. It lengthens the learning curve, I should say, and the set and forget approach is a good way of doing of learning in the first few weeks or months probably. Having said that, when do we cut a trade that goes against us? This is rather subjective and more personal. So there are multiple ways how you can cut such a trade. So you can see here what happens is that price did not go our way immediately. We broke this SMA with good momentum. Usually we would expect to see price continue to move down after seeing such a big momentum break. You can see that after the entry we had 1, 2, 3, or before the entry I should say, we had 1, 2, 3 very, very bearish candles. If we compare that to all the previous uptrend that we have seen here, there was not a single period where we had more than one bearish candle in a row. So you can already see something has shifted here. Therefore, we would have expected to see price continue the downtrend here. And here, this little consolidation is not really ideal because we're seeing that the sellers are not really stepping in at this point. At the same time, it is understandable because you can see where are we right now at this very nice support and resistance flip zone. Resistance is becoming support again, so it is natural that price is struggling here a little bit. But if you are a little bit more on the conservative side, there's no real problem here if you cut the trade here. Another option would be to cut the trade half, get out with 50%, 30%, 66%, 2/3. So whatever you want to do, that is totally acceptable. I would not blame you if you'd cut the trade here. If the trade or if the price would have closed here much higher to the stop loss area, maybe 2/3 into it, then definitely you want to get out with a full position, even if the risk or if the loss you are here minimizing is rather small. So you're probably getting a 0.7 R loss compared to 1 R loss. Over the long term, this will add up, and it is there's no real need why you should not save your 0.3 Rs here if the trade here is going against you significantly. Another question that we can deal with right now is here the second one. If I'm cutting the trade before it reaches the stop loss, why didn't I just set the stop loss here in the first place? So this means, why wouldn't you, if you cut the trade at this point, why wouldn't you have moved the stop loss here or set it here initially? And the reason is volatility. So here was the initial stop loss right around here, and it could have happened here that price was spiking up here, maybe doing a little bit of a bear squeeze, an intra-candle bear squeeze. So a long wick here is, we can see that quite often, probably you don't want to see it that long, but we also have to account for volatility, for spread here. So you could, of course, set your stop loss closer, but then you will be taken out by those little spikes here quite often. So I prefer to be a little bit on the safer side, account for the volatility spikes here, also for the spread. And therefore, on such small squeezes and retracements, we are not as likely to be taken out. So how you would play this then, if you cut the trade here 50%, you see that we're having a few more sideways candles, and then here, once we break the lows on this candle here, it does look very good, like a confirmed retest. Here, if we zoom in, you would ask, why was not this candle a confirmed retest? And the reason is that we are still closing here in the range. So this candle here, the red candle after the green candle, is still closing here in the range. We have not yet broken the lows, and breaking the lows is very, very important, especially on retests and re-entry patterns. So make sure to always have a close here below a previous close. This is now a tough call because the close is just barely under the lows. Usually you want to see a little bit of a lower close here, maybe here or even here. This would be a little bit too late for me, I think. But you get the idea what I'm trying to talk or trying to explain here. You really want to see that price is making a new low and closing below previous lows. And then when you cut 50% here, you have minimized the loss. So you can see this is roughly not even halfway in, but if you cut the trade here, you get a 0.5 R loss on 50% of the position. You get back in here, and then you can still, maybe depending on how you manage the trade, you see that a little bit of momentum is going against you here. You see that here price does not reach your take profit order. Then you see more buying interest come in. Maybe you cut the trade here a little bit. You still get then overall maybe a 1R win, and this is only because you were able to cut the trade here. So this would then probably, so cutting a trade with a 0.5R loss and a half a position is more like a 0.25R loss. And then you can still, if you get back in here, you can still make a decent amount of money over the long term. Even those little gains will make a big difference in your account. And remember that not always do those things reverse on you. Sometimes we have a good follow through and then you get a bigger amount. But if you can just make a little bit of money on those types of trades where it does not really work out, that's quite normal. Then over the long term, you will come out ahead, managing your trades in a very efficient way. Maybe some people would call me risk averse, but I think it's always more important to manage your downside, make sure that you are not getting too many big losses, and then the upside will take care of itself. So I hope this helps a little bit to understand why don't we set our stop loss closer, where would we cut a losing trade, how can we get big into such a trade, and then how we would manage it. If something is unclear, obviously, I'm very happy to help out in the forum. If you want to post screenshots,